Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rook with Jeff Hoogendoorn, a professional ag marketing. Grains all in negative territory to start off here on Tuesday with the livestock futures cattle higher. We're kind of mixed in the hogs. And Jeff, I want to start off. Let's get grains out of the way first. We do have the WASDE coming up here at 11 o'clock this morning. But quite honestly, it seemed like the market was disappointed after all of the talk about China, maybe a trade deal, maybe some soybean sales yesterday, that we got a 90-day tariff truth extension. Did that disappoint the market?
I think it did. And, looking backwards, I don't know if I would have called it that way yesterday, Michelle. I mean, I think the marketplace was, so the way we were looking at it, the marketplace is fairly short these soybeans. They can put some more positions in place there, by the way. So don't take that completely as the entire truth. But I think these short sellers, when Trump starts throwing out some social media posts, that has driven the market in a pretty big way in different situations, right? So I think if people that were short that market, he came out there Sunday saying, China's going to buy all these beans from us and needs them pretty bad. That got the short side, the weaker ones especially, pretty nervous, I think, and were some pretty heavy buying. So now it's almost like extending the deadline for the Chinese trade deal, which I would say is a bullish indicator in general, or by itself, but is a little bit disappointing or gives the short side of this market a little bit more courage, is the way I would look at it and say, okay, well, probably nothing crazy is going to happen in the real short term here. Let's get back into our positions in that bean market, which is, giving up a good half of what we put on there yesterday.
Yeah, that's why we're down this morning. Let's also talk, we're going into the WASDE report. We don't know exactly what that's going to say in terms of how big yield is, but that's really what it's all about here. And we've had some crop tours that have gone out ahead of the WASDE. And basically, even if we get a big number today, do you think the market will discount it because of what we're finding in the field?
I don't know that it will, Michelle. I think long term, we're one of those that get out, earlier than most. So we were out and about last week, and that's exactly what we saw. Some of the key differences here, as far as this WASDE report compared to some of the more final numbers, they're going to rely pretty heavily, in my mind, on satellite imagery. Okay. And that looks really good. Crop condition scores, satellite imagery, all that looks excellent. If they post a big number, which I kind of don't think they will, but if they do today, that's the reason why, is the basis of what they're getting their information. Now, as we were out and about last week, Mike Miner and Jaden from our group, they didn't see that in the fields, and especially on the Eastern front. So I think there'll be, if we post a big number today, I kind of look at that and think, I think they're going to have to dial that back down as you go further into the season, as you get out into the fields and start doing some real observations there. Now, par for the course for the USDA would be to slow play that a little bit, right? So I don't think they'll put the big numbers out there. I'm just looking at it thinking, okay, if we have a surprise today, that's the most likely one that we're gonna have.
Right, but I feel like a lot of this is already baked into prices.
That's fair. I think if you start posting like a 187 type yield, and maybe most of your listeners are now laughing at me, but if you post something like that, I would say that's not baked in. Then we got to go lower if that comes out today, it'd be my opinion.
Absolutely. Okay, let's talk about the cattle market. We did see a little recovery yesterday. We're seeing a little follow through today, but that was a wicked reversal last Friday. We've called these reversals as maybe tops, like what, 6-7 times. Is this one going to stick or not?
As you just alluded to, I really don't have any idea. Of course, what I do think the cattle market will go down someday, just for the record. And I know that's a debatable point here, as we've done nothing but charge higher. But it's an interesting reversal again, very common to what we've seen in the past. So, we're not jumping onto this thing saying that the high is in for sure and it's all look out down below from here. What's interesting about it is it hits that 20-day moving average just very similarly. The dollar amount involved in the drop, 20-day moving average held in there very solidly again yesterday. And now we're just a little bit higher again. So far, it's shaping up to look very similar to the last time that we tried to do this. The only thing that's a little different, I do think that cash market maybe was a little bit weaker, particularly in the north last Friday, and that got a little cloudy because it got mixed into, is it $6 lower futures causing some lower cash? Yes, I'm sure that's a big piece of it. But some of these futures drops, in the past this summer so far, the cash market has completely ignored. So I think that's an important point to note is this one, the cash market was not able to ignore. We had some lower cash, at least in the north. The south performed very well, of course. I'm kind of looking at thinking, we're getting into mid-August here. These cattle are shipping late August. I think you might be getting into a few more willing sellers in the northern part of this cattle market. The south, you might not see that same willing seller down there because you are getting into the time frame where we should have had a few more Mexican cattle coming into that environment.
Yeah. So Jeff, let's talk about the hog market because we have seen tighter supplies. We do have the lean hog index, which has continued to kind of move a little bit higher here, but we cannot take out some of these overhead resistance areas on the chart. So where does the market go?
Well, I think that's okay for now. I mean, the season that we're entering in here is, back half of August going in September, strong seasonal trend for these fundamentals to get weaker and for the futures markets to get weaker, right? So it's a type of market where, steady is a win. And, with an index kind of bouncing around that $110 area, certainly steady is a win. And what we're looking at from a supply standpoint here, we don't get to talk about this very often in the pork business, but it does look like we've got a couple percent less pigs out there right here and right now. And that's based off probably 5 to 8 weeks of data, something like that, right? So there's been enough water under the bridge, I think, to make that observation. The challenge is what happens going forward. Right now, you've got a pork packing industry that's, I think, slow playing the normal seasonal increase that you would see take place. We're going to be a good 4% less than last year for this week, for an example. Now, that's an extreme observation, and it'll be different as you put any sort of average to it. But these 2-4 type kills normally would not be enough for the underlying supply. So what you do is you flip over and look at weights again, right? And I don't see anything on the weight side to suggest we are building the supply in front of a slower type of a kill than what we would have expected. So I think for the short term here, at least, things are looking up as far as having a few less pigs around us.
So what does that mean for fourth quarter? Do you think prices will be able to hang in there?
Well, quite usually we look at this type of situation, Michelle, and that's a great question. We look at it and say, all right, we got a baseline supply that's 2% less than it was a year ago. So let's go ahead and push that forward to our, in our projections, out 4 months, 6 months, kind of the life cycle of these pigs. Well, we don't really dare do that today. And some of the indicators, as far as what we thought we were seeing on the health side, that could be ebbing and flowing as far as available pig market hog supply now. So what I mean by that is there were some indications to suggest that maybe health took a little bit of a reprieve, got a little better through the month of like March, for an example. So you push those pigs out in September. So between that and what I think the Packers' game plan here will be to slow play this kill until it feels like we have a few pigs around us, okay? So you put those two together, it is possible we get down the road here a few weeks to a month to 6 weeks and say, man, there sure feels like a lot of pigs around. I think that will right itself as you get further into October. Here again, we just saw a significant change in health status as we went into the 1st of May, maybe the end of April. So I think there'll be good news down the road. It just might have some hiccups on the supply side as we try to fight through the next couple months here.
Gotcha. Thanks so much, Jeff Hoogendoorn with Professional Ag Marketing. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right.
When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win, you get to be right. Don't just win, win. Talk with your retailer or visit Brevant.com/win to get started.